Hey traders, Raghee here. Welcome to our pre-market show. We should be good to go. I guess I should do a quick audio check, make sure everything's working well on this end. And hopefully it is. All right, so happy Wednesday, everybody. Let's get ready for our pre-market show and hopefully, all right, good morning, good morning. All right, cool. So what I'm going to show you all to start off with is the economic calendar. So we should be able to go to full screen on the platform. All right, excellent. Thank you. I appreciate it. So we're going to head on over, and if you want to do this on your end, head on over to forexfactory.com. We're going to go through the 6 points that I look at every morning. All right. And let's see. There we go. Yeah, I think we got it working. All right, so here is Forex Factory. I don't have any affiliation with this site. It's a site that I've been using since I've been Forex trading. The site's been around for decades at this point. And they have an excellent calendar. And as a trader of indices, stocks, ETFs, even if you're trading, certainly if you're trading currency futures, you want to be aware of not only what events transpired before the current session, this Wednesday, October session, what might have happened in the evening, and then what are we going to be dealing with today? October 7, yesterday we had Jerome Powell. Today we have the FOMC minutes at 2 p.m. Eastern. You'll see that right in here. FOMC minutes make for what we call a caution day. So normally into FOMC events, I usually do not like to be short. Now, I know we saw that dramatic sell-off yesterday. If you guys were watching the markets around 1:30, 1:40 p.m. Eastern, you notice that with just a handful of tweets, the slow and steady climb throughout the midday doldrums was brought to just a reverse, a violent reversal. And we sold off as, you know, we've got this political posturing in DC, and the expectation is we're not going to see some sort of stimulus package until after the election. I think that's nonsense. I think this is a straight up negotiating tactic, and the market's going to see it for that eventually. But for now, the question is whether or not this market is going to rally on the assumption that just because we're going to see a delay in this stimulus package, does that mean we won't see one at all? I think the market's going to figure, well, it'll just have to be a bigger stimulus package the longer that it takes. So I don't think this derails the overall strength in the market at all. It just created a dramatic move on a number of tweets, okay? So let's see. So make sure you're taking a look at the Forex Factory calendar. The other calendar that I'll recommend you take a look at is over here at tradingeconomics.com. All right, so tradingeconomics.com. I like this one because if you like to do rate of change, those data points, right? We talked about the 6 points that I look at. The data points, the trend of the data is very easy to see on Trading Economics. So when you start getting a little bit more into macro and understanding the importance of rate of change of macroeconomic inflation, GDP, and all the different events that would fall under those two pillars, you want to keep an eye on Trading Economics. Fantastic site for those of you that really like to dig deep into the data. So this is Trading Economics, as you can see. And the thing that I'll typically notice on Trading Economics that Forex Factory sometimes does not have is some of the Fed speakers that are not listed on, for whatever reason, Forex Factory. And you'll see down here at the end of the day, there's a lot of Fed speak that I don't believe I saw. I'll double check. Yep. See, notice how we have FOMC Williams speaking here at 3 p.m. So just make sure you check out Trading Economics, and that's going to help you understand what's going on with the economic day. Now, why does that matter? Because of volatility. So today we're going to dive a little bit into how I study volatility. So here we have, this is a service called AutoChartist. I'm a huge fan of this. Huge fan. And what AutoChartist does, if you want to check it out. So here's a few things to know about AutoChartist. Number one, there is a historical volatility to the day. Every day can be in many ways. So I'm going to pull up, for example, let's pull up the S&P. Now I'll do this every morning, but after a while you'll notice that the historical volatility is not a twitchy thing. What you'll notice is that the S&P has a typical number of points that it tends to want to move every day. And our job is to make sure we know what those points are, what they mean to our stop losses, what they mean to our understanding of the opening range. So this is data that I'll use and I'll study this. And this is one of the things that's part of the morning. We've actually built it into the charts where I have an indicator on my charts that will help me with that. It was created from this data. This data was amazing. It's created by my friends over at AutoChartist. And this is a service that I pay for. And a lot of the members at Simple Futures pay for it. It's $145 a year. It's a very inexpensive service. Use it, don't use it. I'm just telling you what I use. But what it does is something that no other platform, no other data providing service does. And that is it looks back over 6 months of historical data and it tells you what the typical price movement range is. So let me show you here again what I'm talking about. So what you see right here is the S&P broken down into 24 segments. 0 Eastern is midnight, 2300 is 11 p.m. Eastern. And so, of course, our opening range is going to be included in this 9 o'clock hour here and in this 10 o'clock hour here. So that opening range, initial balance, that's going to be in those first two columns, these two bars, if you will. We know what typical movement is. This is not a directional tool, but we know what typical movement is based on what these markets do habitually. Now, this is very different than ATR. A lot of traders think this is ATR data, and it's actually not ATR at all. Average true range goes back, say, 14 periods or 21 periods. This goes back 6 months, right? So it's very different. It's historical. It's not designed to be twitchy. For example, average true range, if you had a average true range study, which is perfectly fine, all right? But they do two different things. You can use them in combination, but average true range without a historical understanding of price movement range is not that helpful. You don't need average true range to use PMR, but you do need PMR, price movement ranges, to use average true range, or ATR. And the reason I say that is when you get a sudden move, average true range, depending on how many periods you're using, will be skewed very quickly and sometimes very unrealistically. And you want to know what that average true range is against what we typically see. So there's a lot of power in using them both. All right. If you are a fan of ATR, add PMR to what you're doing. It will make a huge difference. And I'm most interested in volatility today because I'm going to take you on over to the charts here. All right. So what I'm going to do is show you the daily time frame of the ES. And one of the things I mentioned to traders is that we have to have directional bias. We have to have a direction in which we're going to focus on either the long side of the market or the short side of the market, preferably for the session, but certainly for the morning, which means, and some of you may not be familiar with this terminology, which is fine. Let's just cover it now. The concept is whether or not you're a two-way trader, whether or not you're comfortable going long and short. And I'm not an advocate of that. I'm not one who's going to recommend, especially new day traders, be open to being long and short in a session. I think that creates very twitchy trading. So one of the things that we do before the bell even rings, and this stays as a continual conversation for us, is that we determine what the path of least resistance is. That's our directional bias. We have a bias, we have a preference for the direction that we're going to trade the market. And that continues to be long for me for a number of reasons. We won't get into it now, but there's an entire process to that. And just the bottom line is we're going to continue to look long. The biggest mistake traders can make is see that sell-off in the afternoon and assume that it's just going to be more downside. That's usually not the case. That's usually not the case. A lot of large moves, whether they be gaps, whether they be tweet-driven sell-offs, geopolitical-driven sell-offs, they are faded. So if you're not familiar with the term fade, what that means is the market is actually looking at a dramatic move, up or down, and the momentum could be, or the movement could be a bearish velocity or a bullish velocity. And what the market's going to do is say, look at all this weakness. Where is the support? And they'll focus on the long side of a bearish velocity move, and they'll focus on the short side of a bullish velocity move. That's very much the thinking behind gaps when you think about why gaps are faded. So speaking of fades, one of the data points that we talked about is having that 4 p.m. close and the previous regular trading hour high and low, so that you have a better feel for the gap. And that's part of the 6 points that I mentioned that we look at every morning to prepare. And, an easy way to do this, let me jump on over here. So an easy way to do this is to squeeze in, as you see me doing here. You can just start with the gap number. Just go to 1600 hours. What was our close? I mean, it's not even on the map. You see that? Oh my gosh, we're going to squeeze in all sorts of data here to get this to show up. And let's see. So take your cursor over to 4 p.m. And it doesn't have to be exact, but if you can, great. It's going to be a little, these candles are so small, it might be a pain in the neck here. 4 p.m., 33.52 and a half. 30, so write that down. So write down 33.52 and a half, right? Just jot it down. So where are we right now? And by the way, is that are we higher right now than the market was yesterday? Actually, no. You see, I know this is kind of difficult to see, but this is the high we were at before the market tumbled lower on the tweets. This is what the pajama traders did overnight. This is where we are right now. So if we're at 33.79, approximately 33.80, is that a gap up from the 4 p.m. close? Yes. And most traders will stop their gap conversation there. I won't. We'll go take a look at where we are in relation to the high. So this is not extreme gap psychology to me. To be both above the high and the close is ideal. So that's one of the points that we'll keep in mind. All right, so do this across all the averages that you want to trade. Just simple, going back to those points we talked about. And if this is the first time you're joining us, what are these points that I keep referring to? So when I tell you guys I keep a lot of notes, I'm not kidding. I'm writing as I'm trading all day long. So we want to know the data points that are coming out today. There's nothing more important than the FOMC today, the FOMC minutes. We want to be aware of some macro tendencies. I would not have said this had we been doing this pre-market show just 3 months ago. Even a month ago, I wouldn't have discussed it. But as we go into Q4, I do see us moving into a stage D economy, a downturn economy, where we have both weak rate of change, inflation, and GDP. So macro is going to be a conversation that'll start to make its way back into my process. Events, we talked about the events, trading economics, Forex Factory will help you with that. The closing prices, we just did that little exercise right here. Are we opening above the previous session regular trading hour high? We just did that little exercise here. ES is not. And then we also want to look at different patterns. One of the things that I told my traders yesterday in our premium video was that today was going to be all about whether or not we get an inside day or a minor low pattern. And that's exactly what we're going to be looking for. In the meanwhile, we'll just day trade. knowing that we still have bullish directional bias, that my preference and that the path of least resistance is still very much to the upside. And then at the open, I'll make some reads. And I realize you guys get to see the charts pretty nicely here today. I think everything is working pretty well. All right. Oh, thanks for the thumbs up there, gang. I appreciate that. So what you see work on my 1 minute chart are those hourly price movement ranges I talked about. That's what these boxes are. This is a process I created about 7 years ago using the data that came from here. All right. Without this data, I can't do these volatility derived, historical volatility derived. We call them HPMR, hourly price movement range. And those ranges we see to the upper and lower end. That represents the support and resistance historically. Not that we're going to hit both levels, but that's the range we can operate within. So it's a normal operating range, if you will. And I created this about 7 years ago, the calculation, very simple arithmetic that takes the high and low of each hour and then projects the potential resistance and projects the potential support. So I'll have that running on my chart. And then I'll also be looking at some volume derived levels for support and resistance, not just price derived, but volume derived. And that's what the volume weighted average price, volume profile, and here this tool that I created called the V-score does for me. All right. So some of you might be familiar with these tools. And so that's what I will start then to look a lot closer at, and I'll zoom way in. I don't need to see much more than about 7 a.m. So I don't need to, we don't need that scrunched up view. This is about the view. If you see right there, this is about what I'll look at in the morning. I want to look back to about 7 a.m. to current prices, and I can take a look at what's in play once the bell rings, which is going to happen here in about 13 minutes. All right. So I hope this was helpful. Again, go through the 7 points we talked about in the first pre-market. We'll return to those from time to time, but that's what I'm doing in these 20, 30 minutes before the bell rings every morning, that and making some coffee, which I do not have today. I'm still drinking my water. Got to hydrate. Can't expect the brain to work well if it's dehydrated. So I think in the future, I think this worked pretty well. I think we had no glitches here. Sound was good. You guys can see the charts really well. Excellent. All right. So this is just a morning process, gang. It doesn't need to be complicated at all. And then I think I've got a pretty good chat stream going here so I can see what you guys are asking oh, good morning. Oh, hello from Taiwan. Excellent. Excellent. And UK, I love it. I love it. That is awesome. Okay, so maybe in the future we'll take some Q&A. So what we'll do is I'll see you guys tomorrow at 9. Take a look at the levels. Leave this extra time you've got before the bell rings to take a look at yesterday's close and the high and low of the range, and be prepared for the gap psychology. And also ask yourself, how am I reading and understanding volume and volatility? Everyone talks about price. And price is powerful, but you'll realize volume and volatility oftentimes are why the moves that you don't see coming, where was that setup coming from? It's usually coming from volume or volatility, that the market's reached the ends of its volatility range, and then volume accompanied, for example, the reversal down to the off a resistance level, or a reversal off a support level. Okay. All right. So UK, oh, wow, we got UK in the house. Oxford is watching. I love it. London, excellent. I've got a lot of family there, actually. Got a lot of family still in London. So very cool. All right, gang. So I hope you've been enjoying this. Thanks again for the thumbs up. If you have any questions, if you're catching this on replay, if you have any questions, I do check my channel all the time. So make sure you subscribe. Leave a thumbs up, and then if you have a question or a comment, let me know. I do answer those questions, okay? Or at least I'll show you where to head to find the answer, if nothing else, all right? Okay, gang, have a great trading day. It's a caution day. 2 p.m. FOMC meeting minutes. I typically do not like to be short in front of FOMC events, but we often will see a move lower after the the FOMC event, whether that's Jerome Powell speaking or whatnot. Okay, so thanks as always. Have a great day. I'll see you tomorrow.